If you are trading smart money concepts, there's one single pattern that you should never miss. In this video, you will learn a powerful setup that will help you to predict a strong bullish or bearish rally way before it happens. Like this video, subscribe to my YouTube channel, and let me show you how to track the silent actions of smart money on any market. The pattern that I will teach you has a bullish and bearish model, and the only thing that you need to effectively identify that is a basic structure mapping. Let's start with the bearish model. Examining the structure of this pattern. The pattern should be based on two important elements. The price should set the sequence of equal lows, and each bullish movement that initiates after a formation of an equal low should be strictly weaker than a previous bullish impulse, so that the price should set a lower high every time after a formation of an equal low. Equal lows will compose a liquidity zone. It will compose a demand zone where buyers will place their buying orders. And for that exact reason, multiple bullish movements will initiate from that. Lower highs will compose a trend line from where bearish movements will initiate. However, a trend line is not mandatory here, and lower highs may not respect any trend line. Cheaters, don't miss the big summer sale. For 1 week only, get a lifetime access to my premium group with the 40% discount. VIP signals included. For more info, check the link in the description below. Don't miss your chance, traders. The formation of this pattern will signify a silent accumulation of selling volumes by smart money. While the price action contracts within this pattern, smart money will silently grab the liquidity of the buyers, preparing to sell big. To understand the psychology of this pattern, you should study the reaction of the price to a liquidity demand zone. You can see that each and every bullish movement that initiates from this demand zone is weaker than a previous one. It happens because after each test of that, buyers lose confidence in that, and fewer buyers are opening buying positions from that. At some moment, smart money will accumulate enough selling volumes, and there will be no need for them to hold that demand zone. They will let the price go, and a bearish violation of that demand zone will occur. That will provide a strong bearish signal, and that will indicate a highly probable bearish continuation lower. So once you identified such a price model, get ready for a coming bearish wave. We cannot predict how many lower highs and equal lows the price will set within this pattern, but the minimum should be at least 2 equal lows and 2 lower highs. Also, you can see that in this price model, the pattern was formed after formation of a strong bullish impulse. It is not mandatory. Such a pattern may also form after formation of a strong bearish wave, and it will still mean the same thing. Now let me show you a real example of this model in Forex market. That's an example of such a price model on dollar Swiss pair. You can see that after each test of a demand zone, bullish movements follow, and each bullish movement is weaker than the previous. This weakening contracting price action signifies that smart money are preparing to sell big, and they are grabbing the liquidity of the buyers. And they are doing that because they trade with extremely big volumes. And to hide their presence and to accumulate enough orders, they manipulate the markets and price behavior, causing the formation of such patterns. When they accumulated enough selling orders, the price started to fall rapidly, and our demand zone was violated. You can see that then the price dropped much lower, and we could easily predict that move before it happened, spotting this pattern. A bullish model of this pattern has a very similar structure. A bullish model of this pattern will be also based on two important elements. Equal highs will compose a supply zone, a zone from where bearish movements will initiate, and each consequent bearish movement from equal high should be strictly weaker than a previous one, so that after each test of a supply zone, the price drops and sets a new higher low. Higher lows may also compose a rising trend line, but it is not mandatory, and higher lows can be placed randomly. This pattern will signify a silent accumulation of buying orders by smart money. It will signify that buyers are preparing for a strong bullish rally, and while a price action contracts within this pattern, they grab the liquidity of the market participants. The signal that smart money got enough of the orders is the violation of a supply zone. bullish breakout of that will signify a highly probable bullish continuation to higher structure levels, and that will be your strong signal to buy. You can see that in that example, before the price model was formed, the price formed a strong bullish impulse, but it is not mandatory. Remember that such a model may easily form after a strong bearish impulse, and this pattern will still signify the same thing. Let's study an example of this pattern on pound-yen forex pair. That's an example of such a price model on a pound-yen pair. Equal highs compose a significant supply zone. After each test of that supply zone, bearish movement initiates, and each bearish movement is weaker than the previous one. It signifies that over time, sellers lose confidence in that supply zone. For that reason, selling pressure from that becomes weaker and weaker. It happens because smart money are manipulating the market, not letting it go up. Instead, they grab the liquidity of the sellers, accumulating huge volumes of buying orders. Analyzing such a price model, we can make a prediction that with a high probability pound yen is going to rise soon, and a strong bullish rally is going to follow. We don't know when exactly it is going to happen, but we know for sure that a violation of that supply zone is going to be a very strong bullish signal. It will be our signal to buy, and we can make a very nice profit. Alternatively, we can catch a very nice entry, letting the price drop one more time from that supply zone. Once the price sets a new higher low, that can be another safe place to buy, anticipating a bullish movement to the supply zone and a potential bullish breakout then. Important thing to note about this pattern is that it effectively works on any market and any time frame. So you can use that effectively for day trading, swing trading, or scalping. And it can also help you to find great investment opportunities. Let me know traders in the comment section if you have any questions. Also traders, don't miss a big summer sale. For 1 week only, get a lifetime access with a 40% discount. VIP signals included. For more info, check the link in the description below. Also traders, please watch my other videos.